Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, I want to discuss a question I got on public that was really important, and there are a few things I want to break out and help you to understand when it comes to investing, because I think it can help you save a lot of money and a lot of frustration. Now, I'll read the question and we'll break it down. So the question says, how much can you put on one single stock to make a great return? And that has a lot of implications. So let's break that down. So one single stock. For me, and I think for most of us, we don't want to put all of our eggs in one basket. That's the old tired phrase that we all say. But that is risking a lot to say, look, I'm putting everything, it doesn't have to be everything you have, but I'm putting my money in one thing and I'm expecting a great return. So that's number one. I don't think that that's the best approach to go through your investing journey. We can we can discuss rather how many stocks you should have and all that kind of stuff. And that's a conversation for another video, perhaps one we've done in the past. But in either case, that was the first thing that stood out to me. So it's one single stock. I think you should at least, at a minimum, I don't know, get 5 or 10. An argument can be made for plenty more, or just go with ETFs, exchange traded funds, because those are built to diversify. They're built to have hundreds of stocks in one particular investment. So that's number one. The other part was a great return. A great return is really relative. It is relative because, for example, if you told me that you made 7% in the market last year, I would say that was bad, because the stock market last year made us like 27% or so. But right, the average for the stock market since 1950 has been 7 to 10%. So it depends, right? If you told me this year in 2020, so far, so it's March 25th, the market is down, and if you made 7% in the last 3 months, that's really good. So a great return is really dependent on what time frame are we looking at and what is going on relative to everything else. 7% is great now. 7% for an entire year last year isn't all that great. 7% in a day is really good. So again, same return, but what we consider is great is vast, right? It really depends. But then the last thing, and this is common for all investors, is that all new investors rather, it could be new and old, but in either case, what I see is not approaching investing in what I think is the best way, the most efficient way. Where most people try and look at it and say, well, let me find the best return, or what I think can be the best return, and then back my way into what investments I should have. That's really called chasing. Meaning that, oh, I see that this stock is doing really great, let me hop into it and then hope that it gets me what I think is a great return. That does two things for you. Number one, it has you jumping into things because they did well without really understanding why they did well. But also, you get into it, perhaps it goes up, and then you don't know when to sell because you don't know what your goals were, when to get in, when to get out, or why it was up in the first place. So an example of this is NVIDIA. Now, I like NVIDIA for the long term. I've talked about it before, ticker symbol NVDA. Fine, right? Yesterday, it was up more than 9%. If you were chasing, you said, oh, I want a good return, I want a great return, which I think we could all agree that 9% in a day is good, then you would have saw what happened, you would have invested in it today, and you would have lost money because NVIDIA was down today. Now what? Do you hold it for the long term? Do you hold it for 6 months? Do you hold it for another 5 years? Or do you just get rid of it because it didn't work for you today? That all depends. If you have all of your money in one single stock, your reaction may be different than mine because I have more than one stock. I've got 12 or 15, however many it is on public. So it's not going to impact me as much because it's not the only thing that I'm investing in. But if you focus on return first and then try and find something, you can invest in a lot of bad stuff that just had a great day. Another thing I see people run into is investing when you're chasing for returns. People will invest in things that reported earnings, right? Oh, company did well on earnings, the company shoots up, and you invest in it, and the next day it just kind of trickles off. And it's like, well, it was earnings. That's what they do. The stock market overreacts during those periods in time, and it's just not the best time to just first jump into something, right? A better way to approach this, in my view, is to say, what is my goal going into this? What do I think about the market going into this? And then find investments that fit with that. So for example, and I say this all the time, but I go into it saying, look, I don't know the future. I have what I can expect to happen within the next year to 6 months, or 6 months to a year. And that's all I can do. And when I get to that point in time, I will reevaluate, rethink my theory, rethink my hypothesis, and then decide whether or not a switch needs to happen. That's the goal. I'm into it right now. It's not doing what I wanted it to do. I thought that it was going to be a good company. I thought it was going to be a great stock, blah, blah, blah. I bought it. So far, it's not doing well. However, my goal is wait until June, see if things get better or worse, and then we'll reevaluate to see whether we're right, whether we're wrong, or if there's hope between now and next year or the end of this year. That's totally fine, right? But again, I said this is what I think about the market. That tech was going to be shaky, that defensive stocks were going to be good, that interest rates were going to rise, and we make those determinations, and then we go out and see what's best for us. So another example is I've talked about this before. Is if you're new to it, hit the like and subscribe, do all that. But for example, we knew rates were going to rise. We knew financials were going to be at least pretty solid. We didn't expect Russia. That has impacted the market. But if I know financials are good, then that narrows my focus. So I'm looking at Bank of America, I'm looking at Signature Bank, I'm looking at Morgan Stanley, I'm looking at Goldman Sachs. And then I can say, well, my goal is to make X percent, or my goal is to be in the spot where I think investments are going to do well. Then which one of those 5 stocks is going to be best for me? And then boom, say it's SBNY, say it's Signature Bank, or say it's Bank of America, or whatever you think that thing may be. But again, I started backwards. I said, well, what do I think the stock market is going to do? Where do I think the market is going to move? This is the sector. This is the area, and then which one of these companies is going to be best for me? And then, not really, like I did mention a percentage I'm trying to make, but in reality, I'm really not. What I'm trying to do, my goal for a great return is just to do better than what the stock market does. Whatever number that may be, because I don't know, right? So it's never just 7%, because market was up 27%, whatever it was. I'm just going to call it 27. So market was up 27% last year and I made 7. I have underperformed by 20%. That's not going to cut it. However, this year, if the market is down 10% and I make 7, that's great, right? So my job is to try and do a bit better than whatever the stock market is going to do. That's it. That's all I can hope for. If I get exactly what the market does, fine. If I do better, I have succeeded. That is the best approach, in my view, to approach the stock market, as opposed to chasing returns. Because on a lucky day, a stock can take off. On a lucky day, y'all saw what happened with Dogecoin, right? Last year, where it went up 1,200% or whatever it was for no real reason other than it was a trendy meme coin. That was it. That's how people get burned. It shoots up. You're chasing returns because you want a great return. You want to put all your eggs in one basket, and boom, you go and look for it, and then you turn around and it falls. You're like, well, what happened? Why? Well, it didn't have any real value at the time. It was, it was just, people just wanted it just because they wanted it, as opposed to what is the stock market doing? What is the economy doing? What is going on in the world that is going to boost said company, or even a coin if you want to go that far? So you got to be very, very careful. I don't think you should start off with your returns and then try and find a stock. I think you want to start off with where is the market going, what is supposed to do well, and then start to narrow down your investments from there. The last thing I'll say too is, and we talked about this as well, we talked about the mistake you can make with percentages, saying I want to make X percent, because if you lose that same percentage, then you're actually going to be down, is when I'm doing trades, so shorter term investments, I want to make sure that I'm looking for a $10 gain, a $15 gain, a $500 gain. But again, that is contextual, right? It is easier for me to make $500 in a day, to make $1,000 in a day, if I'm investing $200,000. That's easy, right? Like that's real easy. But if I'm only investing $5, I'm expecting a $500 gain. Now you're looking real unrealistic, right? So you got to be very careful about that context and get your expectations in the right place. And it's always going to be dependent, very, very dependent on what you are investing in, when you are investing, what is going on in the market. If you were to ask me right now in March of 2022, what would you invest in for the next 6 weeks? Then my answer is probably going to be Cleveland Cliffs, CLF. Maybe it's Coca-Cola, KO. Maybe it's Signature Bank, SBNY. That's just for the next 6 weeks. If you ask me, what do you think is going to be best in the next 5 years? Again, context has shifted. That might be a Google. We talked about why in yesterday's video. Make sure you check that out if you haven't already. So the answer is always going to depend. But I think the reason is working backwards. Like even for the companies I just brought up, why do I think that's the case? Like, why do I think a Coca-Cola would be great for 6 weeks, even though I think you should be investing for longer? Why do I think Signature Bank should be good for the next 6 weeks, even though you should be investing longer? Well, the reason is rates are going up. I think banks are going to do well. Regional banks have more growth potential. Right? So you kind of get those things lined up and then you find a stock that works. I've said dividend stocks are going to be good. What's one of the best dividend stocks that have been paying dividends for what feels like 100 years? Coca-Cola is one of those, right? So I'm saying what's going on in the market? What is my goal? How well has it done relative to the market? And then I end up landing on Coca-Cola. That's how it works, right? But that's only for right now. I would not have picked Coca-Cola a year ago. I did not expect Coca-Cola to be as good as it is a year ago. I just didn't see it coming. It's been real slow for Coca-Cola up until now, and things have changed. So, what time are we investing? What is your goal? What is your plan? But then most importantly, you want to figure out what is going on in the market and what is the plan moving into it. Have those things written down, hopefully, but have it very, very crystallized, and that's going to get you into your return factor. That's what's going to get you to whatever your financial goal may be, because it's easy. It's easy now for me to say that if I'm looking to do a short-term thing, and that's fine if you want to do more short-term investments, it's harder to do, but you can. Then I can say, now that I've done all this work, dividend stocks, defensive stocks, whatever's going on, I say, okay, the investment's Coca-Cola. Well, now I can say, as opposed to just jumping into it right now, I can say, well, I need to wait until Coca-Cola comes down to X price. I'm going to buy it here, and then when I'll get out once I make $25. Or whatever that profit goal is going to be. That profit goal is going to depend on how much you're putting in. You're putting in $1,000. I think $10 profit is fine, right? $500 profit would obviously be better, but again, that's half. You're making 50%. That'd be difficult to do in a short amount of time. But in all of these cases, it's all about context. It's all about context. 7% when the market is down is great. 7% when the market is up 50 is not great. Right? So you always want to look into that, and most importantly, do your research to lead you into the stocks or investments, not just stocks, as opposed to trying to find the biggest gain and just hopping on that without all that context. I don't think I've mentioned it before, but like Nvidia, I hope I'm not being repetitive. I've done a lot of takes today. But like Nvidia, it was up almost 10% yesterday. On Thursday, it was almost up 10%. Today it was down more than 1%. So then you're like, oh, let me chase after Nvidia. It did great yesterday. Let me get into today, and then it falls. Even though, right, context-wise, research-wise, we know that tech stocks just haven't been great. Microsoft hasn't been great so far this year. Perhaps it'll change. Nvidia hasn't been great so far this year, with the exception of yesterday. Now, do I believe in both of those companies next 3 to 5 years? Absolutely, I do. But again, what is a great return? That's gonna depend. 5 years from now, 2 years from now, 3 years from now, yes, I think those are gonna be a quote unquote great return. I think they'll beat the stock market because they have in the past. That doesn't mean that it's a great return for this year. But again, you as an investor, you have to decide that for yourself. I can't tell you what a great return is going to be because I don't know when you're looking to sell. I don't know what those goals are going to be. You have to decide it and use your research, use the tools that we talk about on the channel, subscribe, ask questions, because sometimes we make videos out of them. Use all of that to choose a stock for you. Always use your goals to inform your investments and not the other way around. And when I say use your goals and use your research to guide your investments, I don't mean I want to make this money right now and just hop on whatever. That's not a process. That's just chasing. All right, so that is it for me. I will talk to y'all later. If you have any other questions, comments, or concerns, the comment section is always open for you. Also, make sure that you subscribe. We did pass 3.2 thousand subscribers. I'm trying to get to 7. I have no rhyme or reason why 7 is just the number. 7,000 is where I want to get to, but I want to get there. I want to make sure that you are along for the journey. Plus, it's free. Subscribing and liking, all that's free. All right, I'll talk to y'all later. Bye.